Thank you for watching this video. Do like, share, comment and subscribe to this channel for more information. Stop using indicator wrongly. The 2026 guide to combining indicators for insane accuracy. Most traders lose money not because they don't have indicators, but because they combine them the wrong way. In 2026, as we approach, trading has changed compared to 2025. And if you keep mixing indicators like before, you will keep blowing account. But today, I am giving you the exact formula top traders use to combine indicators for insane accuracy. Once you learn this, your entry and exit will never look the same again. This will shift your trading career like never before. Welcome back to my YouTube channel. In this video, I'm going to break down the right way to combine indicator in 2026. A powerful, clean, and professional approach that cut out noise in the market, remove confusion, and help you identify high probability trade. No more chart overload, no more conflicting signals, no more analysis paralysis. By the end of this video, you will know exactly which indicator to combine, why they work, and how to use them together to increase your accuracy, confidence, and your win rate. Don't forget, I am Mr. Joshua that teaches traders how to trade the smart way, and not just forex alone. I teach also crypto. Now let's move, as I teach you, let's move deeper how to combine indicators. Now the first thing first is why most traders use indicators the wrong way. Now the first is that they stock too many indicators on one chart, making it confusing for them to even read the signals being provided by such indicators. That is the major thing. You see people overcrowding their chart with indicators. Is not good, it's not fair at all. You are just bringing more confusion on a daily basis to your trading career. Indicators repeat the same information, so having many indicators bring about redundancy in your trade. Don't put plenty indicators because redundancy is sure to happen. In fact, you will even mix things up. Don't forget that indicator, they mix strength indicators with lagging oscillators incorrectly. Many people mix strength indicators with lagging indicators incorrectly, and by so doing misses trade and lose out in the forex market. And most people actually they trust signals without market structure. The signals from indicator without, now indicator on its own cannot give you accuracy. Indicator on its own, just indicator without the market structure, without understanding market structure, cannot in any way help you. Cannot in any way help you. You need to combine both the market structure and then the indicator. That's when you are going to gain profit in the forex market. That is just the truth about it. That is just the truth about it. I will not stress this too much, but that is just what you have to understand. This is just what you have to understand. Now, most traders trade indicator instead of market behavior. So if there is only a cross, they will say, there is a cross of this, and this has gone overboard, this has gone over. So no, we can't continue like this as we are entering 2026. We can't continue like this. You need to be smarter than the indicators. The indicators will only help you. Now look at this now. Now with this trade now, I have confidence for me to sell this particular trade. I have confidence to sell this particular trade. Now, there is no indicator here. But if now I bring an indicator now, you're going to confirm that what I'm saying is actually true. Apart from my TDI that is here, if I bring an indicator now, you confirm that what I'm saying is actually true. Why? Because I study the behavior of the market first before using an indicator. Indicator is good, very, very good. I still use it. You are look at my screen now, you are seeing indicator. I still use it today to tomorrow. I still use indicator. But that does not mean that I should not understand the nitty-gritty around the behavior of the market. Now, guys, let's move further. Now, in 2026, as we approach, smart traders no longer use indicator to predict the market alone. They use them to confirm market structure. If you stick to predicting the market with only indicator, you will keep blowing your account even as we proceed to the next year. You will keep blowing your account and you blow it in a crazy way. You keep blowing it and you keep blow it in a crazy way until it sticks to your mind and you become an expert trader by using the indicator to confirm the market structure, not as if you are trading only the indicator. Now, that is why I usually tell people, now you visit a trader, a forex trading academy, and only what they teach you is indicator alone, how to reach indicator. That's an error. That's an error. Run from such kind of places. Now, what are the golden rule of combining indicators? What are the golden rule confirming of combining indicator? Now, first thing first. Now, I want us to understand that for you to combine indicator the right way, you need to use indicator from different categories. That's how to combine indicator. Use indicators for what? From different categories. Now, we're having the trend indicator, we're having the momentum indicator, that's the oscillators, and we are also having the volume indicator. Now, when you use from different categories, you are actually doing a good comparison of them, and you're combining it the right way. Now, first of all, you need to understand your market structure first. Now, in this video, I'm not talking about market structure, but I'm going to drop on the description button, on the description section, sorry, of this video. I'm going to drop video link that I have taught people about market structure. I taught price action, I taught break of structure, support, resistance, trend line, how to use trend line. I'm going to drop it on the description section of this video. Kindly do well to continue learning from the description section of this particular video, because it's going to help you a lot. Now, first of all, you need to understand market structure first. Understand market structure. When you have understand the market structure, you are going to use the trend indicator. Now, what are trend indicator? Look at it now. We have indicators which are trend indicator. Look at it. Now you see trend indicator. We have the average directional movement index. We're having the Bollinger Band. We're having the envelope. We are having the Ijimoku. We're having the Ijimoku. We are having the moving average, which is the popular one. We're having the parabolic star. We're having a standard deviation and the zigzag. They are all trend indicators. They are all trend indicators. Now you can use them and tweak them so that you can have a super trend indicator. It will help you a lot. So secondly, you need to understand how to use the momentum indicators. Momentum indicators are oscillators. So basically, we are having trend indicators and momentum indicators. Now, the momentum indicators are to show us where the momentum of the market makers is heading to, or where the momentum is in the market. And momentum indicators are such as we have the average true range, we're having the bear power, we're having the bull power, we're having the commodity channel index, we're having the marker, we're having force index, we're having MACD, moving average convergence divergence, we're having momentum, we're having moving average of oscillator, we're having the RSI, which is the relative strength index, we're having the relative vigor index, that's the RVI, we're having the stochastic oscillator, we're having the Williams percentage range. And then after you have gotten this, you might decide to also use volume indicator. But personally I don't use volume indicator. Personally, I don't use volume indicator, but you can decide to use volume indicator. You can decide to use it. Now, example of volume indicator: we have the accumulation and distribution, we have the market profile, we have the money flow index, we have the unbalanced volume, and we have the volume. Then you can see other indicators like the Billy Williams indicator. Now, Billy Williams indicator is actually a combination of the volume indicator, the oscillators, and also the trend indicator. So now, never combine two indicators that tells the same story. For example, when you combine RSI and stochastic, both of them are momentum indicators. Both of them are momentum indicators. So never combine same indicator that says the same thing to you about the market. Now, never combine EMA, moving average, exponential moving average, or moving average, or Bollinger Band together. All of them are actually trend indicators. All of them are actually trend indicators. Now, the perfect 2026 indicator combination for high accuracy setup: number one, you need to combine, is either you combine, for beginners, you combine the exponential moving average plus the relative strength index plus the volume. It will give you very good combination as a beginner. Now remember, the indicators are used for confirmations. They are not used to take a trade. They are used as what? Confirmation toward your market structure. Now use this for confirmation based on entry. Now, for example, the EMA 50 or EMA 20 now determine trend directions. It actually determines what? Trend direction. Now the RSI 14 or the RSI 30, anyone you are using, shows momentum strength. It shows the momentum in the market, the strength of momentum. And then volume confirms strength and breakout or rejection in the market. We need to have this handy as we approach 2026. I'm doing this video with heavy heart because many people wanted learning forex, many people wanted to become profitable, but no, they are not. They could not become profitable. Why? Because of this very issue. Combination of many indicators that brings about confusion in the market. Bring about confusion. You get it? It brings about confusion. Now, we use the moving average in order for us to confirm whether we are in an uptrend or we are in a downtrend. That's moving average 50 or moving average 20. Now, for insane accuracy, you need to combine this kind of setup. Now this is for professional. I just gave for beginners. Now this is for professional. You need to combine market structure plus MACD plus ATR. Now this is best for swing trading and synthetic indices. For synthetic indices, you need to combine these two particular indicators: the market structure, the MACD, and the ATR. That's for professional setup. Now, the market structure that we talk about here, we're talking about the break of structure, the BOS. I have a video on that. You can watch it. Higher highs and higher lows. Those are the fundamentals of market structure. And then MACD, which confirm the momentum shift in the market, and the RTR, the ATR, sorry, which actually confirms volatility level for proper stop loss. Now, how can you enter a trade? For example, now using this. Now, when the MACD histogram flip from red to green and ATR increasing, it means volatility support the move. Volatility has supported the move. Now this filter out about 50% of fake move in the market. That is why I said this particular one is for professionals. It's for professionals. Now you can also move ahead. um this one is a secret weapon, my own secret weapon. You can move ahead in order to use the trend line plus super trend and divergence, RSI divergence, or any kind of divergence that you want to use. Now you can use the RSI divergence, you can use any kind of divergence that you want to use. Like if you look at me, I'm using these for divergence. Wow, I entered trade without knowing. Yeah, so let me close this trade. So sorry, I made mistake. I entered a trade, so I had to close the trade because the trade was not analyzed. It was not analyzed. Now, when you use trade lines, like I use in a video before this particular video, I did a video on market structure plus trend line trick. Now, if you can combine trend lines and then divergence, it will help you a lot. It will go a long way to help you because RSI divergence give early reversal signals. It gives early reversal signals. It actually predicts the future. So now, when you combine structure plus trend plus early reversal confirmation, it becomes very powerful. It gives you a very powerful indicator. Now, how to use these combinations the right way? Rule number one is that market structure comes first. You need to understand market structure first. Now, indicator follow price, not the other way. Indicators actually follow prices, not the other way. Now, rule number two, you need to select 2 to 3 indicators maximum. You need to use 2 to 3 indicator maximum. Anything more, confusion plus late signal will happen to you. So you need 2 to 3 indicator maximum for any kind of trade. Rule number three, wait for all confirmation. Don't just enter market because 1 or 2 of them have been confirmed. Wait for the third one to confirm, because it is in doing that that you become accurate and perfect. Now, a perfect trade has strength on your side. It has momentum supporting the direction, and also volume and volatility validating the strength of the market. You need to put that at the back of your mind, because when you wait for all of the confirmation, these three things happens. The trend is always on your side, the momentum is supporting the direction of the trend, and then the volume and volatility validating the strength of the particular trade. That is rule number three. Don't forget, rule number four is never enter on one indicator. Just because of one indicator gives you a go ahead, never enter on one indicator. Because if you enter on one indicator, you are definitely going to lose. Now, three confirmation gives you high probability of trade. Three confirmation gives you high probability. And when it is two, don't trade. Make sure you wait for the third one. Now, example of a perfect high probability trade is a buy setup, for example, where price from a higher low, and then the moving average is trending upward, then the RSI breaks above the 50 level, then there is a volume spike during the break of structure. Now, this is exactly how professionals catch a clean entry and a perfect entry, and they don't lose money. Why? Because they understand how to combine indicator the right way. Now, this is just what I have for us as regards this particular um, video. Now, 2026 is coming. Forget about the failures and the achievement of 2025. You don't need 1,000 indicator. You just need the right combination. When you mix market structure plus trend plus momentum plus volume, your accuracy shoots through the roof, and you stop trading like a blind man. In 2026, the trader who simplifies will definitely win. But when you complicate, you will definitely lose. If this video help you understand indicator combination in a deeper way, hit the like button so YouTube recommends this particular video to more traders like you. Drop a comment saying, I am ready for accurate trade. I am ready for accurate trade. If you want me to drop the full indicator settings and template, then do this for me. And don't forget to subscribe so you won't miss the next strategy that I will be sharing with us, which will transform your trading. Thank you so much for watching this video. I remain Mr. Joshua, that teach traders how to trade the smart way.